crude oil price started 2018 with a bang, rising from an opening $60 to a January peak of $67, a gain of 12% in less than 1 month, whilst February saw oil prices give up all of January's gains by falling from $67 to $58, before recovering toward the top of the emerging $67 to $58 trading range. And the trading range for March set the scene for the current rally that hit a 3-year high of $69. Whilst my forecast for 2018 since the start of the year has been for the oil price to target a trend to $80, and my last update of late February reaffirming my $80 target despite the then deep 15% drop, with my concluding expectations for the oil price to spend March within a tight trading range before resuming its trend higher towards $80. And now for my current technical analysis of what to expect the oil price to do over the coming months. Starting with the MACD, which is bullish and not overbought, which is supportive of overall rising oil prices. And resistance is at the previous major support at $90, which suggests the oil price could trend higher towards that level, while support is in the area $58 to $60 that should contain any brief reaction lower within the trading range. As for trend channels, the oil price has hit the upper end of its rising trend channel, which suggests a reaction lower is likely. Also, given the shallowness of the channel, then unless there is a major breakout higher, then the oil price progress higher is likely to be slow. Elliott waves. I count 5 minor waves off the 58 low, which suggests that to expect an ABC correction that implies that the oil price looks set to remain within its trading range for the next month or so before resuming its trend higher. Seasonal analysis. Oil prices tend to rally into late summer and then fall into early winter, which is supportive of a trend higher in oil prices into late August to early September, which is the time window that I expect the $80 target to be achieved. And now for the fundamentals. ARAMCO. The Saudi government recently made it known that they wanted the oil price to rise to $80 so as to ensure a successful ARAMCO IPO this year. Whilst this has grabbed market attention, however, when one of the oil market's key major players is attempting to pump the oil price higher so that they can effectively dump ARAMCO stock on the market, then that means that they are eyeing the maximum possible price they can temporarily achieve, which implies significantly higher than $80. So the announcement may be for $80, however the objective is probably a lot higher, maybe as high as $100, as the difference between $60 and $100 could amount to as much as $1 trillion difference in ARAMCO's IPO valuation. So expect the Saudis to continue trying to manipulate the oil price higher, both through Saudi oil supply and through their proxy wars in Syria and Yemen, which includes apparently the false flag operations such as the recent supposed missile attack on Riyadh, all of which are aimed towards boosting the oil price ahead of the ARAMCO IPO. And then we have the EIA reports that the US oil stocks falling towards a 5-year average of 430 million barrels, down from 540 million barrels a year ago. So whilst not screaming bullish, nevertheless falling US oil stocks are supportive of oil prices. And my final forecast conclusion is to expect the crude oil price to remain within a trading range for the next month or so, within a high of $69 and a low of $61, whilst my 2018 forecast for a target high of $80 remains intact, and which now looks set to be achieved between late August and early September. So I don't expect the Saudis to get their $100 crude oil price so that they can dump ARAMCO IPO stock on the market this year. Still, if the Saudis time it right, they could sell Aramco stock whilst the crude oil price is trading at or very near $80. And ensure you are subscribed to my YouTube channel for my forthcoming in-depth analysis and detailed trend forecasts.